Welcome to FX Tech's comprehensive analysis of the EUR/AUD currency pair. In this video, we'll be examining the market dynamics from October 6th through October 11th, 2025. This report was prepared on October 13th, providing you with the most current technical and fundamental analysis available. We'll explore key price levels, important news events, and actionable trading recommendations for both short-term and medium-term strategies. Whether you're a day trader or swing trader, this analysis will equip you with the insights you need to navigate the euro to Australian dollar market effectively. Our analysis draws from 5 premier Forex data sources to ensure comprehensive market coverage. We've consulted TradingView for real-time price data and technical indicators, Investing Live, formerly known as Forex Live, for breaking market news and sentiment, actionforex.com for detailed technical analysis and daily outlooks, forex.com for institutional-grade market insights, and Daily Forex for weekly forecasts and fundamental analysis. By synthesizing information from these diverse authoritative sources, we provide you with a well-rounded perspective on EUR/AUD market conditions and trading opportunities. As of October 14th at 9:54 UTC, EUR AUD is trading at 1.79164, showing positive momentum with a daily gain of 0.89%. The pair opened at 1.77605 and has reached a high of 1.79364, demonstrating strong bullish pressure. Looking at broader performance metrics, the pair is up 1.42% over 5 days, 1.66% over 1 month, and an impressive 10.44% over the past year. Year-to-date performance stands at plus 7.07%, indicating a sustained uptrend. Current technical indicators show neutral readings on both oscillators and moving averages, suggesting the market is in a consolidation phase with potential for directional movement. 3 major news events shaped the euro to Australian dollar landscape during this period. First, renewed US-China trade tensions, with President Trump threatening new tariffs, significantly impacted commodity-linked currencies. The Australian dollar was particularly affected due to Australia's strong trade ties with China, leading to increased market volatility. Second, central bank divergence became apparent when the Reserve Bank of New Zealand surprised markets with a 50 basis point rate cut on October 9th, while the RBA maintained a cautious stance. Meanwhile, the ECB is dealing with inflation at 2.2%, above its 2% target. Third, Australian economic data showed steady business activity in September, though improvements in sales and profits were offset by declining employment, with the RBA flagging potential Q3 inflation concerns. The technical picture for EUR/AUD reveals critical levels that traders must monitor. On the resistance side, we have R1 at 1.8155 and R2 at 1.8554, representing key breakout zones. Support levels are established at S1, the 55-period 4-hour exponential moving average at 1.7744, S2 at 1.7569, and S3 at 1.6922, which corresponds to the 38.2% Fibonacci retracement level. The intraday bias currently favors the upside, with the key breakout level at 1.8155. Technical analysis suggests the correction pattern may have completed at 1.7569, setting the stage for potential upside continuation. However, a break below 1.7744 would turn the bias neutral, requiring traders to reassess their positions. For the 1 to 2 week time frame, we present 2 distinct trading scenarios. In the bullish scenario, traders should look for entry opportunities on dips toward 1.7744, targeting a move to 1.8155, with a stop loss placed below 1.7569. This setup offers a favorable risk-reward ratio for long positions. The strategy here is to buy dips and ride the momentum higher. Conversely, in the bearish scenario, traders would enter on a rejection from the 1.8155 resistance level, targeting a pullback to 1.7744, with stops placed above 1.8155. This approach is suitable for those anticipating short-term profit-taking or reversal patterns. The strategy for this scenario is to sell rallies and capitalize on corrective moves. Looking at the 1 to 3 month outlook, we assign a 60% probability to the bullish scenario. This scenario would be supported by further escalation of US-China trade tensions unfavorable to the AUD, a more dovish RBA stance, weaker Australian economic data, or a significant slowdown in the Chinese economy. The target range for this scenario is 1.8155 to 1.8554, with the strategy being to buy on dips and focus on the long-term uptrend resuming. The bearish scenario carries a 40% probability and would be triggered by a favorable resolution to the US-China trade dispute, a more hawkish RBA, a significant Eurozone downturn, or improvement in Australian economic outlook. This scenario targets 1.7569 to 1.6922, with a strategy of selling on rallies and targeting deeper correction. Understanding risk factors is crucial for effective trading. Upside risks for euro to Australian dollar include further escalation of US-China trade tensions, which would weaken the Australian dollar, a more dovish stance from the RBA that could lead to rate cuts, weaker than expected Australian economic data that undermines confidence in the Aussie, and a significant slowdown in the Chinese economy affecting Australia's export-driven economy. Conversely, downside risks include a swift and positive resolution to the trade dispute that would strengthen the AUD, a more hawkish RBA stance that supports the Australian dollar, stronger than expected Australian economic data that boosts the currency, and a rebound in the Chinese economy that benefits commodity currencies. Traders must monitor these factors closely to adjust positions accordingly. Successful trading requires strict discipline and risk management. First, implement strict stop losses and never risk more than 2% of your trading capital on a single trade. This is fundamental to preserving your account and ensuring long-term sustainability. Second, maintain proper position sizing by avoiding excessively large positions, especially in volatile market conditions. Scale into positions gradually and maintain diversification. Third, engage in continuous news monitoring, staying informed about US-China trade relations and monetary policy statements from the RBA and ECB, as these are key drivers for euro to Australian dollar movements. Fourth, maintain strategy flexibility and be prepared to adjust your trading approach in response to changing market dynamics. Markets can shift rapidly, and rigid adherence to a plan can be costly. Remember, this analysis is based on data from October 6 to 11th, 2025, and market conditions can change rapidly. Always trade cautiously and implement proper risk management.